Hey everyone, welcome to another episode of Hash It Out by Foundership. My name is Bimlesh Gundarao and I'm the co-founder at Foundership. We bring in amazing stories on what's happening around Web3 in conversations with founders, business leaders, and technology professionals on everyone who's doing some amazing work in blockchain, Web3, crypto, NFTs, DeFi, and a lot more. I'm super excited to bring in today one of our portfolio companies as part of our founder series and portfolio series at Foundership. Welcome, Preetham. Amazing to have you and to represent what you're building at Zoth.
Thanks, Bimlesh. Great to be here. Means it's always a pleasure to be with Foundership team, our early backers, and we are glad to be in this new initiative that you have started.
Thank you so much. So this is so just to help recall to our audience, Foundership is a Web3 accelerator that backs early stage global startups with different programs. For pre-seed stage, we have a program called Zero Risk Camp, and for seed stage companies, we have a program for Launch Camp. So do check out our website for our upcoming program, which is exclusively built on Polygon. Super exciting opportunities for early stage builders. So thanks, Preetham, for joining in, and we're going to talk about a whole lot of things about how you started, what got you into Web3, and where you are on your journey with Zoth and so on and so forth. Right. So without any further delay, talk to us a little bit about your background. What were you doing before you started Zoth, and how did you get into entrepreneurship?
Thanks, Bimlesh. So, for me, Zoth was a culmination of multiple uh, areas that I worked in. So, I have worked across very traditional industries. I started my career in automotive, then moved to IT, e-commerce with companies like Unilever and Advisor, especially spending time in AB and web. I also had the opportunity to start an early stage syndicate with one of my partners, which was primarily into early stage startup investing and alternate investing, primarily non-market linked products. At Budweiser, I had the opportunity along with my co-founder Kaushik, where we worked very closely with Gary V and other and created a fintech ventures primarily in emerging markets into trade finance, into SMB and small and medium business lending and borrowing. At the trigger for Zoth started when while investing in I would say cryptocurrencies for the last few years, we saw an opportunity of bringing emerging market gaps, emerging market challenges that currently most of the economies face, which, say, for example, if I look at small and medium businesses, they lack access to credit. If I look at remittances and multiple other areas, that fundamentally Web3 and the whole blockchain ecosystem can serve these needs way better. It's frictionless finance, makes it easy to one move capital across the globe, and most importantly, reduces the bridges that exist. And that's how we got excited. We did multiple projects while working at Budweiser in this space, especially using stable coins for treasury management, creating an end-to-end fintech ecosystem for our customers and distributors with more than 275 million in AUM. And that got both me and Kaushik excited to build Zoth, because we felt that for crypto to be moving from a 1 trillion to a $20 trillion economy, it has to move beyond its own echo chamber to more real world applications and real world use cases. And means I always say that I could have always started another beer brand or gone to another consumer goods industry, but I felt that sometimes you have to take a leap of faith, because like it comes from my own investing psychology, that when you invest somewhere, either you are investing your money in your time, your downside is protected, which is the amount of effort that you are putting in this case. But if you get into an industry which is early, which like, say, when somebody got into early 2000 into e-commerce, or for example, say, when Nvidia started investing in AI chips, when nobody kind of really understood that industry, it was small, the potential return is 1000x. So why not spend and build your credibility around an industry which is nascent, which is growing, and which has the potential to change the world? Both of our interests, me and my Kaushik's interests, were aligned. We felt that this is going to be a fundamental ecosystem, especially among emerging markets, and that's why we started. So.
So how did you and Kaushik come together?
So Kaushik was so I was heading fintech ventures and avian web, creating new growth opportunities as well as running the accelerator and the fund that avian web does to invest across various companies. Kaushik actually joined as an intern and became my investment partner, exploring Web3 cryptocurrencies for almost 3 years. And this was around 2020. We both started looking at what are the various use cases that where we can use Web3 for Budweiser. It started with using metaverse for our PR, our e-commerce, for our commerce initiative, then using stable coins to explore our efficient treasury management across the globe, and then finally working with Gary V to launch the Bud NFTs. So between the two of us, we had a shared passion for blockchain and Web3, and with Zoth, we saw the potential where both of our ideas meet, and then the journey just extended from being part of Avian Bev to now with Zoth.
Fantastic, fantastic. I still remember the early days, as part of the initial Zeroish camp, when you and Kaushik came together, to meet us up and to have interactions, right? So talk to us a little bit about the very early days on what was that problem statement that you were trying to solve. This is, I think, last year, June at this time. And how did you arrive at the name Zoth? What does it mean as a brand name?
Yeah, so I think we started thinking about this idea around June. At that time, most both of us were at our jobs, and we were still figuring out what is the kind of best use case that are there. So our thought process first started with kind of putting together a broad canvas of what we wanted to do, then trying to figure out, for example, one of the things which we felt that is this something which will work, will there be customers? For example, at Zoth, we bring fixed income products for developed market, high net worth individuals, institutions, which primarily are basically income yielding trade finance invoices, asset leasing from emerging markets. And we started kind of connect with some potential customers across my network as well as through various reach outs and distribution channels, and we started seeing that there is a possibility. For example, somebody earning 2 to 3% yield on US dollars, or 4 to 5% at low risk. Definitely in a bear market, they are looking for products which are which generate higher yield and have lower risk than a traditional stock or a crypto backed risk. So that's how our thought process of Zoth started. We first started focusing on building a marketplace focused on Indian market initially, at the early stages, but then we realized that potentially the market is not mature enough at this point, so pivoted to more uh, getting assets and opportunities from emerging markets across trade finance, inventory finance, asset leasing, and primarily offering them to more developed markets where there is demand as well as the yield gap is higher for customers. At early stages between June to October, our focus, while like Kaushik was already at a job, I had just put in my paper, so we were kind of in my notice period. We were trying to figure out, what is the best approach that we go about it, what is the go-to market, what is the distribution, and being a sales and marketing person over the years, one of the things I always believe that products don't sell it themselves. You need to sell. So we started selling even before we had a product. We started talking to customers. So even before we first wrote the first line of code, we have already sold to 100 people just on PowerPoint. Like, this is the concept. Will you be interested? And I think around early this year, we kind of focused on really building the product out of shape and getting interest and traction initially. And that's how basically we got into the full journey of building Zoth, setting up the whole team, and now at this, the speed where we are, and kind of scaling it further.
Fantastic. So how did you arrive at the brand name Zoth? What does it mean?
So Zoth means calm. Zoth is primarily a Korean word which has been actually taken from a Korean video game which uh, some of our team members love, and the character primarily represents calm in the middle of storm. So the whole idea was that how do you, in the presence of all volatility that you have across the globe, how do you bring assets and opportunities which are not market linked and not really very volatile, and that's the whole idea behind Zoth. And also, we wanted a name which is people can easily remember, because again, going by the marketing books of it, it shouldn't be difficult for people to recall. So we wanted to
Right.
spend very limited time and energy on things which can be done easily. So a name, small name, easily rememberable, people can quickly go and find it out, and that's what kind of the whole idea of Zoth came.
Fantastic. So, from your initial days was about one use case to solve, tokenization of real world assets, right? To now to a change in focus. What made you to look at a pivot, and what's your focus area right now? If you can share that for our audience, that'll be awesome.
So two things. One, when we started, our focus was how do we bring more and more tokenized real world assets, especially areas like real estate, and sell it to end customers. While our focus still really remains the same, which is tokenization of real world assets, one of the things which we realized that it's the category of asset that matters, because tokenization is itself needs to be a value add and needs to remove some layers rather than becoming a layer of it. So our initial thought process of tokenizing and selling assets to markets like India, we kind of, as we were building and we were doing customer research, going through the process, we realized that the market need and appetite at this point might not be big enough, and there might be a bigger opportunity to focus if we rather focus on bringing um, short term yield generating products which can be kind of started and stopped easily, and basically sell them to markets where the yield, like general yields generated by bonds, deposits, etc., are lower. So instead of a market focus of selling in India and building in India, we focused on sourcing assets from emerging markets while uh, primarily selling those assets in the developed markets. And that's one of the learnings which I feel every entrepreneur at an early stage should have, because we we were very I would say gung ho about what we wanted to do, but when we started going out to the customers from day one, we realized that okay, these are the certain gaps that we have in our strategy, and this might not be the right time to do it. So we just changed track. What I have seen is primarily a lot of people build product for years and then realize that there is no PMF or traction. So for us, the focus was that you sell first, get to the customer, understand what's the specific need we can solve, and then kind of spend time and energy on building. So yeah, so we changed track because we got very good feedback very early at our journey, and we had the opportunity to pivot because we hadn't invested much in building at that point, so we could quickly pivot the whole team, restructure everything, and just focus on our new journey. Had it been like say 6 months down the line, it would have been very difficult for us.
Right, right. So this again comes back to the core principle that when you're trying to build out a complex product or even a simple product, there are two types of market validation. One is to solicit feedback via the mom's test of asking a lot of questions. Second is actually to present your hypothesis and see what's the actual kind of response that comes in. So this goes back to the principle of what you elicited earlier, to say that, hey, sell first before you start building. And I completely agree to that, because a lot of times as founders, we go into the syndrome of building first and then going out to the market to see what we have built as a market, versus doing the other way around, which always has 9 out of 10 times probability of giving the opportunity to enable more agility in pivots, or even to look at adjacent problem statements to solve rather than the one that you're trying to solve for. Very interesting.
So I
Thanks for
think
sharing.
for us the unique things had been we have more than I think 80 GB of data of customer interviews and more than 500 plus customer interviews that we have done. That started while we were building our previous product and as we are building it now, because what we realized that these are gold mine. These provide the insights which you don't generally get. When you are talking, and as we started selling, you would realize, oh, this is the gap, this is the feedback. So yesterday, for example, we went through every single feedback that we received on our product to improve our product backlog and improve our product refinement and see if that makes sense, because this way you really can build a product which there is a famous saying, build something which people want to buy.
Yeah, absolutely. Fantastic. Amazing. So, talk to us a little bit about, as part of this pivot and these user interviews, what were some of those key insights that you gathered that gave you the conviction that this pivot is critical, because this is going to offer not only the initial momentum but also the opportunity to scale and really become, a well-known company that is solving on-chain liquidity for real-world assets. What was those couple of moments? How did that uh, insight come about, and when did those insights come about by?
Yeah. So we started building with first with a philosophy or a hypothesis that we tokenize real estate. Real estate is loved by Indians. So tokenize, create small fractions and sell it there. So as we started building and talking to customers, I think there was a positive response to it. But as we started building, we started realizing the frictions involved of basically tokenizing and selling it, the opportunities, the competition that's out there. And then we realized, are we building to solve a problem, or we are just trying to find another use case for a technology in a market which is maybe not enough mature at this point. And the second is, if you look at the overall TAM, if you look at the per disposable income of the market, a lot of questions started coming up. However, as we were doing that and kind of building the product, we started getting a lot of customers from outside India who were quite interested in the product that we are building. So it started giving us a quick insight, hey, there might be demand in that. So instead of we started reaching out to customers in those markets and talking to them, what attracted us you to our website, what do you feel is attractive. Then we realized that, say, a 9% yield on a tokenized on a tokenized asset is not very attractive to somebody based in a high interest country like India, but it's really attractive to somebody based in US, in UK, or in Europe. The question is, do they want to invest in Indian real estate, or they want to invest in any real estate on a scale and lock in their money? So we did a lot of customer personas and we went through the journey and we realized that, okay, short term, high yield investment products are in high demand. We saw how the market started evolving, the whole RWA narrative happening, and we realized if we just flip our model from tokenizing in India and selling to India, so tokenizing in emerging market and selling to anywhere in the globe, our TAM increases, our opportunity size increases, and I am catering to a population which is more favorable towards Web3, is understands the market, the model, sees the opportunity and has an inherent need to get higher yields. That's my target market, and that's how the I would say the flip happened for us, because we said that, okay, maybe we go into the real estate tokenization specifically for Indian market few years down the line, and maybe that this is not the right time to do it.
Got it. Got it. Fantastic. So by setting up your company in India and looking at this opportunity and this problem statement to solve, how did you navigate some of the regulatory challenges? What did you come across? What have you done right now in terms of enabling this entire structure to happen? Talk to us a little bit about that journey, because it is something that every founder today in Web3 is grappling with, to say that, where do I set up? What do I do? How do I structure? So, any experiences that you share from your evaluation, due diligence, and your perspective.
So one thing I do suggest that any consumer facing web3 application, it's ideal to have an headquarters outside India. India is more suited for web3 infrastructure build, development, services kind of a model. Now, coming specific to regulatory structure for, so if you are building a consumer product with very strong Web3 elements selling to Indian customers, I think the challenges and the barriers that involved are quite high. And if it was me, I would wait for setting anything up at this point till there is regulatory clarity. However, I think, and my suggestion would be to kind of, there are multiple other geographies, especially if you're building a consumer facing application, to look at those geographies which have more favorable regulatory regime. And I think, it's just a regulatory evolution. What happened in other industries, say, for example, e-commerce, electric vehicles, robotics, or betting, online betting kind of things, etc. So I think, as a founder, dealing with regulation is one of the, it's an important thing. But in Web3, unfortunately, that becomes a big part of your, say, problems to solve along with building a business. So try to be in a jurisdiction where those problems are limited. Web3 is global. You are building for a global audience, so you try to build it from jurisdiction like Dubai, Singapore, Wyoming in US have come up with very favorable laws. So you could kind of use those jurisdiction for any consumer facing product, and for any build, development, services, infrastructure kind of product. I think India is still quite feasible. There is a challenge though about accepting cryptocurrency payments for your services and businesses. And I think every founder needs to talk to their respective lawyers and taxation individuals on that. So for me, I think we were very clear from day one. We structured on a dual entity with our entity being based out of Wyoming, Singapore, and India. And yeah, means depending on the nature of the business and the transaction, we are kind of multi-country setup. And we are also going through a bit of structuring now, as in terms of our new DeFi model, to make sure that our entire structure is more compliant and in alignment to the local laws. We are actually part of the India's Web3 regulatory sandbox, and we are also in advanced discussions with ADGM and a couple of other regulators to ensure that our structures falls in place.
Fantastic, fantastic. So there's a lot of effort gone especially in a business like yours, to ensure that local jurisdiction laws are taken care on not only where you operate, but where your funds will operate from, and where your investors are coming from, and most importantly, where your real world assets are going to be coming from, right?
Yep.
Because they could be global, they could be only from emerging markets, and as your customers will be in different emerging markets, you need to have covered jurisdictions which are closer to those markets. Thereby,
Yeah.
you can serve your end customers as well. Fantastic.
Yep.
We'll flip the conversation now towards fundraising, right? You have been on the other side of the table until you became an entrepreneur, where you have been evaluating deals, you have run a syndicate, you have run a corporate venture arm, and now when you turned entrepreneur, talk to us about your experience on what you saw, felt, and learned as a founder on your own fundraising journey.
So I think my respect for founders and founders' time has gone up by 100x. As an investor, I have been guilty of not responding quickly. So one of the things which I've consciously done now, of anything that comes to my table as part of our Eagleton Ventures, I might take decisions quickly. Either it's an in and out in a matter of hours, because there is no point keeping somebody hanging. But my journey has been, I would say, a completely 360-degree turnout. Means we have raised funds for our initial setup and launch, and we also had venture capital firms backing us. One thing, for us, the fundraising journey has been primarily through our initial warm connects. And as we are kind of scaling up now, we are thinking of kind of going to another round. We're still working on it. But I think Web3 fundraising this year has been tremendously difficult. I think, especially because of the whole market sentiment, the way the whole FTX and the saga has came up. Um, I think few things which, I won't say we have been very successful, but we have been. I would say we have been moderately successful. What worked for us is that from day one we focused on the problem that we are solved, and how are we going towards a very cautious path for it. And even when we started with our own money. We have been very frugal in what we spend, and um, how we are spending, which I generally don't see in many Web3 startups. So my focus has been that you do not raise when you need money. You should raise when you don't need money. So we basically raised two rounds, but we raised them when we didn't needed any money, and we had enough runway for like a year or so at least to cover our expenses. And the second thing is, means I always believe that investors' money is not yours money, so it's not for you to spend. So being very conscious about where we are going, where we are investing all our. So Web3 involves a lot of travel, especially because you have to connect in conferences. We have been very frugal in every aspect to make sure that the money lasts longer. And I think, in terms of specific to fundraising, means I would suggest that in today's market, product and traction is what matters. So we raised, actually during FTX and bit of pre-FTX period. So I would say at that time you still could have gotten with an idea, but now you need to have a product with some traction in place before you get any kind of funding from especially venture firms. So I would suggest that, if you are an early stage founder, to start with trying to get hold of angel networks, then go to VC funds as the step by step process. And funding is difficult, and you and nobody is obliged to fund you. Means there is no guarantee that you will get funded. So you only start now, or only if you are in it for the long haul. Else, this is not the right time to kind of expect that you'll start and you'll have millions of dollars coming and chasing your idea. So it's gonna be a long haul. You have to be in it for some time, and I think this is a good time to also reflect on any kind of project or any idea that anybody is working, because you know the next funding might not come. So is it even, can you sustain without a funding? So if that's a yes, great. If not, maybe need to rethink your business model.
Yeah, absolutely, absolutely. How since this has been your first uh, time also as an entrepreneur trying to raise funds, uh, and you have a young co-founder who has never been in the fundraising mode. How did you? I'm sure with a bunch of investors that you spoke to over the last 9 months, you have had some successes. I'm sure you also had a lot of rejections during this process. So how did you both navigate the naysayers in your journey of fundraising and yet keep the focus on having high conviction on what you're building and converting some of these naysayers to yes over a period of time? So talk to us a little bit about that, because it will help a lot of young Web3 founders who are coming into it now to kind of understand and expect that not everyone is going to say yes. And when an investor says no, what does it mean? And how do you reflect upon it? What lessons you take from it? And how do you quickly move on to the next pitch?
Yeah. So I think, first and foremost, Bimlesh, I think I would say to anybody that entrepreneurship is tough. Like, it is 100x tougher than any job. Although I have seen it very closely. I was actually a co-founder of a business, but before Zoth, but like getting full on, which is like, no, without a plan B. This is my first time. So yeah, definitely, I think. Rejections there has, obviously, because of the you face more rejections than you get yeses. One thing I would strongly say that you cannot take rejections in your stride, because most of the if you see that most of the great ideas actually come because which are ahead of time. People don't really realize them, that they are a great ideas before they have actually become successful. When they become successful, it's already too late. So I think as founders, we need to be passionate about what we are building and be honest to ourselves and to our investors. So when I started, I had few milestones and I set up. I was see one thing which I was very clear that I'm building something which not only needs my capital but also needs my time and energy. So there is no way I can build a bootstrap business for if I have to build something on a large scale. So I was very clear from day one that I will start raising from day one and see how it works. And it was always about have a 3 months to 6 months goal. Did I achieve the 6 month target? If I have fairly done well, move on to the next target in terms of raising. Now, specifically, I think in terms of raise, what I feel is that what we did correctly and what we didn't do well is what we did well was we went to our warm connects from day one. So that helped us get our initial raise. What we could have done better is done more cold outreaches, done more follow-ups and connects, which we didn't do because we felt that our warm connects were enough to kind of finish the round size that we wanted to do. So I think in the hindsight, if I have to do the whole thing today, I would kind of revisit the whole process and do a combination of both warm connects and cold connects. The second thing is, until money has hit your bank or tokens have hit your wallet, it's not done. We had the experience of a very famous venture cap who committed to a signed all agreements and in the last moment decided to not wear the funds because some other portfolio company of theirs went bust. So you have to live with this. What I do, I as an individual, I always tell that investor that you tell me a yes or no as soon as you can, means, but don't keep me hanging. And I think what I have generally seen is that in the Asian ecosystem, decision making takes time. While we have did some fundraising in the Western markets also, the decision making is much faster. Either it's a yes or a no, and you know what you are getting into. And the third thing is one thing which was quite a surprise is even if somebody has said no, we always kept them updated on our progress. Which if we got into an accelerator, we signed a new customer, we built a new version of the product, I always used to keep them an update either through Telegram or through emails, keeping them of all the progress that we are doing. I think a no is never a permanent no. So there was one investor whom we met during token 2049, and she was not very confident in investing in us at that point. But in March, after seeing the progress that we are making and the pivot also that we made, she was quite interested in what we are doing, and it took us like 2 days for us to write a check and there. So I think investing is a journey. It's like I feel it's like dating. You need to keep it warm and keep engaging. A
Yeah.
few cardinal rules, however, I would say is that most of the founders do is putting investor on a higher pedestal. You are building a business. You are putting your blood and sweat. Do not do that because otherwise you'll get both wrong terms and I think it's your business. If you ultimately are negotiating wrong terms, it's going to harm you in the long run. And I think be truthful in your interaction and expect truthfulness in your interactions. We have been very honest for our pivots, for our failures, for our wins to our current investors and also some of our potential investors. um, there are people, as I mentioned, of one example where the individual signed the agreements and they did at the last minute. But there would always be people like that. But for us, we are very clear. Means if Zoth will be a big company, means the doors are closed forever. So be clear on your principles, clear on your ideas, and it's okay. Means you just need one yes. There could be 99 no's. So keep going. So we keep going. I keep going up after every rejection and keep pitching and keep going. And um, and uh, the last thing I would want to say is that, most people I have met, especially as an investor, came for very privileged backgrounds, from from privileged families, from privileged colleges. My upbringing was, not really a very privileged upbringing, and I faced a lot of ups and downs in my life, including a point where I was at my lowest point in my life. So I have seen worse times than getting just a no from an investor. So what I have seen I had the opportunity to talk to many founders who get depressed, who decide to walk out. I'm like, I have seen worse times in life. So, in life, sometimes what happens is, before starting a business, when you are a job, things are pretty much like, it's going to a defined path. You pass college, you get promoted after every 3 years, you never face a big failure. I always love to both invest in people and work with people who have failed in life, because once you fail, you can take any failure.
Right.
And for me, this is just another journey. Just keep building, keep trying. Someday or the other, you will make it.
Fantastic. Very, very well said. I think the key is, two things. As you said, this is you have had a lower points of time in life, and getting rejections in the investor journey is not really a low point, or even when having to close down a business because for whatever reason it's not working out. Taking those such decisions are hard, but they're again not the lowest points of life, right?
Yeah.
Each one of us do have those moments in our own life journeys where we will be challenged on how we handle such low points, and it's all about how you deal with it and what mindset you build during those times to make you come out of it, right? So your true mental strength actually defines your character at those times, right? And past experiences always help, but it's for the first time when someone faces rejections, it's always a tough uh, situation to deal with. But a lot of founders take solace in these days where they have founder communities coming up. They have a lot more access to founders than what they were before. Communities like like what Foundership enables also enables people to talk to each other and have these conversations more openly and frankly. And
Yeah.
end of the day, it's to also realize that I'm not alone in this journey, and this is not happening just only to me, right? It happens
So I will
to
tell you
many
a
of
personal story, Vimlesh. Maybe I can relate to that. So, because for me, I've started with this mindset that I will make it big in entrepreneurship. So that's my personal mission. And when I
right.
started, guys like Kaushik, I met, we tuned, and pretty much my whole team, we know each other. Even Parshak, who has joined us now, is actually ex Foundership cohort
Right.
member also. So see, when you have a vision, when you have a mission, you get people around you to build towards it. So for me, my biggest lower point was in life was when I was studying engineering, especially in the fifth semester. I got four backs in one semester, and there was one teacher who once told me, "You are not even fit to do engineering. You should go and do something else." So I left college, went to Tirupati with a close friend of mine, and decided to leave studying and just sit and pray. But something happened, and I felt that I'm not that kind of. I can put more effort in my life. So that was actually turning point for my life academically. And that from that semester onwards, I kind of start. There was one point where I was topper in the entire university, and then went on. So I'm saying I've seen those setbacks, and setbacks have been times where I bounced back higher. Similarly, I was in working in Mahindra and was looking out for roles, and I was not sure what I want to do in my career. And Economic Times ran a program called Economic Time Young Leader, and I knew that I have very limited chance because 100,000 people are gonna apply. But I made it. I was interviewed by Harsh Mariwala in the final round, and then Nitin Paranjpe, who was the CEO at Unilever at that point, just offered me a job over a dinner. So what I realized is my life has been all about trying. You keep trying, but you have to make sure that while you are trying, you don't lose everything. You have to be optimist, but prepare. So do the best you can, but also be prepared for the worst and keep trying. So entrepreneurship is also that this is my life's mission that I am very clear about. I'm gonna build on it, and I'm grateful and thankful that we have been able to get great friends who have now become colleagues in Zoth, as well as the whole ecosystem of investors who have believed in us. So yeah, we will make it big. So all about is
Fantastic.
the vision, and just failures will happen. That's fine.
Yeah, yeah, absolutely. I think one of our coaches said that everyone is an entrepreneur until they realize that they are one, right? Until that they realize. So entrepreneurship is all about trying to create value in the best possible ways that has
Yeah.
a mass impact that can change people lives, to make it better. Fantastic. Uh, coming towards the the end of this conversation, it's been really insightful on kind of taking you down the path of your journey and opening it up for our listeners out here. Talk to us a little bit about your journey with Foundership. You were part of our first cohort at launch camp. We were starting out. We were just starting out our Web3 focused accelerator. We were new. You were new. What were some of the thoughts that came to your mind in you choosing us while we made the decision to bring you in? So talk to us about your journey. You're also part of the first batch that graduated early this year in March. Um, Talk to us.
So I think foundership happened by means we obviously saw it on Twitter, and you and Santosh both are quite well known in the startup community, and I had heard of you from obviously some of the previous avatars of yours and Santosh. So when you both started foundership, I think we were at a stage, we were on a piece of paper. It was just me and Kaushik. We were we had decided that we are going to leave our jobs, and we wanted to build something on blockchain. We were just not sure what we wanted to do, and we had gone through multiple ideas. We had thought about multiple options, but we were very clear we want to build something in Web3, which is hard, because there are many people building the next NFT, the next penguin, or the next, but how many people are really solving which a problem which can create a wider impact. So we started looking at obviously asset tokenization, and we felt that okay, I do have a business experience from my previous years across the market, and Kaushik has good technology experience, but we felt that we needed some sounding board, somebody who can understand us, who can get. And obviously there were other options at that point, but you were the only guys who were really focused on Web3. Um, and and we felt that that's where we really want to deep dive in, get fully immersed, and not just become a cohort of 100 other startups or 100 things, but a Web3 specific accelerator who can help us in areas like tokenomics, can the business model, refine our thoughts, and most importantly act as a sounding board. I think what most attracted us was your and Santosh's background as an entrepreneurs, because my journey as an investor and entrepreneur has always taught me that there are many analysts and many people who run programs, but I think the value that a founder who has actually gone through that journey of building a business, either scaling it big or shutting it down or building something else, that value add is way different and way more priceless. So we were very keen to kind of work with guys who have built businesses, and I think that was really what attracted us to foundership. And we were very grateful, because when we were there, we literally had just an idea on a piece of paper.
Fantastic. Cool. To kind of wrap up this conversation, talk to us a little bit about where do you see the future of real world assets coming in? How are you building out your liquidity pools around the market making functions, and we'll close it out there.
So I think real world asset has actually suddenly become very hot in the crypto narrative. Means I just returned from few conferences outside India, and pretty much everybody is talking about it. Once we started, it was not. That also makes the sense that this, you don't start with a like with a phenomenon, you start what you really believe in. What I truly like, what we are focusing on right now is kind of creating our liquidity pools and selling to customer. We have actually started selling, and as of today, we have close to $1 million worth of liquidity pools which we have sold, and we have more than 7 million worth of SMBs and businesses lined up which we are borrowing. What we are focusing on currently, our products are permission products, which means that you invest in a pool, you get locked in for a certain durations and get out. Our subsequent iterations would be permissionless, which allow DeFi investors across the globe to invest and withdraw at any point. For that, primarily we are tying it up with our token launch. We are targeting our token launch somewhere in Q1 of next year, and we are glad to have now partners like Gravity X and Chainlink, who are also working very closely with us as we build our token launch approach and kind of getting our community excited about it. And yeah, means our vision is to really create an ecosystem, starting with private credit and for trade finance, for businesses in emerging markets, and then slowly scale it up across areas like asset leasing, invoice discounting, then inventory financing for emerging businesses, and then cross-border settlement. Basically, creating a whole ecosystem for making finance fairer for emerging markets using DeFi and blockchain.
Fantastic. Superb. Any last passing thoughts for founders who are now exploring how to choose an accelerator, why they should look at an accelerator, and your own insights of being now part of a couple of accelerators? How do you extract maximum value out of it?
So I think I honestly think if you are early in your journey and if you are not a first, not a second time founder, whether you have a fundraise or not, you should always be part of an accelerator, because accelerators add a lot of rigor and structure, which we had actually experienced with Foundership also, to the whole process of company building. Because company building or a idea building is only 5% idea and 95% execution. I think working with Foundership helped us create that structure and methods, which helped us get to our pivot quickly, build on what we are building today, and scale it up from there. Um, as an accelerator, I would always want to be part of an accelerator which is really invested in us and has skin in the game, and people who have been operators themselves. I think YC accelerators like Orbit startups really stand out, because these are accelerators or programs which are not run based on Excel sheets, but people with real experiences. And I would always prefer them because you have some real life experience which you could share. And I would any day choose. And one thing which we felt is it's better to go to a cohort specific to your functional area. I mean, there are a lot of accelerator. We actually had an experience with an accelerator. I would not name them, very famous, based out of US, and they were chasing us for to getting part of them. They were guaranteeing some fundraise and all of that, but we didn't see the value add in them, and we had to kind of literally push them. And few weeks ago they just basically went for bankruptcy. Is primarily the difference for us was that we didn't see the value add. So unless if you are a founder looking for an accelerator, I would honestly suggest try to look for two things: who are the people behind it, how they have helped the previous batches in scale and grow, and third and most importantly, are they operators themselves? Because if they are operators, they know the in and outs of running a business, and can they really help you in multiple areas.
Fantastic. Thanks, Preetham. Thank you so much for these passing thoughts. I think this has been one of the most insightful conversations on talking to a founder who's not only part of our portfolio but also who's been an investor on the other side, now building a team, building a product, building a business, and also raising funds, talking to the same investors, but now as a founder trying to raise money and going through this entire journey of building a fantastic Web3 business. So thank you so much for your time again and joining us at Hash It Out by Foundership. And look forward to catch up again in a few more quarters as you make, as you achieve more milestones and achieve more growth. And wishing you all the very best.
Thank you, Bimlesh.
Fantastic. So this is it, guys. Thanks for listening in. And if you like what we are doing, do click and subscribe and click on the bell icon either on YouTube or on Spotify as you listen to this podcast. And once again, our upcoming program is built on Polygon. We're launching. Applications are open for our 0x camp, which is for pre-seed stage startups, and our launch camp will be following up soon, which is for funded startups going forward. And watch out on us on our announcements on Twitter and on LinkedIn. Follow us on all our social media and join our Telegram group. Join our community because we are the only accelerator that runs community initiatives called BlockMeet in about 40 cities around the world. And that's a way we bring the entire global Web3 community together in enabling a sense of ownership, trust, and transparency for a lot of our digital interactions. That's only going to scale up from here. So with this is Bimlesh signing off, and see you in the next episode with another founder in Hash It Out. Thank you so much.